Good Sunday morning to everyone out there. It's your man Investing with Cam. Hope everyone had a great week and had a great weekend so far as well. I want to come on here and give you guys an update on how my strategy as far as trying to grow a small account without investing any of my 9 to 5 money into the market. And so some may ask, well, how do you do that? And so basically what I've been doing is selling options. And on the screen here, you can see I have TSS Incorporated. And down here, you can see where I have 105 shares of this particular stock. And so I've been selling call options on TSS Incorporated. And whatever credit I receive, I basically turn around and I will either invest that premium into another stock itself, or just hold on to that premium and wait till TSS goes below my average cost and buy more shares of it so that I could basically get more shares of this particular company, because I would love to have, to be honest with you, 500 or 1,000 shares of this particular company. Just reason being, the options credit can be really good, especially when you start owning that many shares. But not only that, I really believe that TSS Incorporated is going to be a big player when it comes down to the AI infrastructure, and that they're going to be around for a long time, as long as AI doesn't for some reason crumble and fall, so to speak, like we had the .com bubble and that kind of stuff. But we'll see how it all plays out. I mean, anything and everything when it comes down to the stock market can be risky for the most part. But yeah, so with all that being said, let's get into some numbers. So as we can see up here at the very top, TSS Incorporated is trading at $12 per share right now. And from yesterday, or I'm sorry, on Friday, TSS Incorporated dropped almost $4 per share. It dropped over 24%. And on Friday, it was earnings for this particular company, in which the company did beat the expected earnings by about 4 cents per share. So I'm going to go down here and you can see where it says the estimated earnings was 4 cents. The actual earnings was 8 cents. So TSSI did beat the estimated earnings amount. But just because a company does that doesn't mean that it's going to continue to rise as far as the stock price or anything like that. But with that being said, the reason why TSSI sold off like it did, and I just did a little snapshot here and I'm going to read it to you guys. And so the company reported a 44% revenue drop to 55.3 million compared to the prior year. And it was driven by a normalization in procurement activity, though AI rack systems integration revenue nearly doubled. And so with that being said, TSSI is still an extremely profitable company as a whole. It's just that, like with anything in life, you may have, and I can't really think of a real world example right now, but you may have something that's just booming at the moment, just because it's new, so to speak. And then after a while, it starts to stabilize and it starts to kind of even out, because you may have wrangled the entire market or whatever the situation may be. And so that's what's basically happened with TSSI. It's kind of evening out. That's why it says normalization in procurement activity. So it was a boom early on, and now everything is just kind of smoothing out. And so once I guess a lot of the investors start to see what the normal numbers may be like, then possibly the stock may go back up. I don't know, and I can't say, but regardless, I still believe that TSSI is going to be a great investment for the long run. And yeah, of course, they don't pay any dividends, so this is more of a growth stock at this point in time. And also, like I mentioned to you guys, I'm selling options on it, so the options premium can be pretty good with this particular stock as well. So let's go down here. I want to show you guys where my average cost is $13.27. And like I said, TSSI is now trading at $12 at this point in time, even though the market is closed. And so for this stock to be down almost $4 kind of shows you how much I was up for the time being, in which I was thinking I should possibly sell my shares and wait for this stock to go back down, not really knowing whether or not it would go back down. It could have continued to go up. So I just held on. And like I say, in the long run, it's just a stock that I want to hold anyway. So I'm not really worried about me missing out on the price appreciation, because I could have possibly secured about $400 or $500, not $500, but maybe about $400 or more in profits if I only would have sold. Then I could have turned around and bought back in at about $2 less per share, because TSSI had gone down to under $12 yesterday. It was at, it went under $11. It was at $10.64. So I could have literally sold my shares, bought back in and possibly even bought about 200 shares and doubled my shares, and been able to have, like I said, a lower average cost, and been able to sell options on 200 shares as opposed to 100 shares. But it's just a chance that anyone takes when dealing with the market, unless you have some type of insider information or what have you. It's just hard to jump in and out of trades for the most part when you're trying to benefit from the appreciation in the stock price. So let me stop rambling on. Let's go into the trade here. So we're going to go trade, and then I'm going to hit trade options, in which in order to trade options on any brokerage, and I'm on Robinhood, you have to get approval in order to do so. You just can't open up in a brokerage account and start trading options. You have to be approved to do so. So that's just a little heads up on that end. And so I'm going to go here to this up and coming Friday, which is on the 15th. And so this is what we would describe as the options chain for TSSI at this point in time. And if you own 100 shares of any stock, you always want to sell a call. If you're going to sell options or get into options at all, you want to sell that call. And so as you can see at the very top, I have sell selected and call selected, because once again I have 100 shares. So now let's go down here to the options chain. You see where it's highlighted it's $12.50 call, and then there's a $13 call, and to the right of those strike prices you'll see where it says 35 cents. It also says 20 cents on the $13 call, and then as we go further up, it's zeroed out on the 13.5. At the $14 strike price, there is a little bit of interest at that point as well, where you see the 5 cents price right there. So I'm going to click on the $14 call, and I'm going to go into some details here. So if I was to select this $14 strike price, I only have, once again, 100 shares, meaning I can only sell one contract. Okay, each contract consists of 100 shares. And then if we go down here to the second line, you'll see where it says limit price. We have a bid price of 5 cents and an ask price of 15 cents. So if I was to sell an options contract at this strike price, I wouldn't get much premium whatsoever. Even if I was able to get the 10 cents, I would only be able to basically get $10 for selling this particular options contract. At the same time too, you know that my average cost is $13.27. So if TSSI was to start going back up again, and happens to hit that $14 strike price, I would have to sell my shares at the $14 strike price, meaning I would get roughly about $73 in price appreciation on the stock, on top of the $10 that I received in credit for selling this particular contract. So I would come out roughly about $83, $84 on top. And then I could, go and sell puts or just buy the shares depending on where they're at, and then start selling calls again. But like I said, I wouldn't receive much premium whatsoever. And so what would make more sense would be for me to go down to the $13 strike price and sell a contract at that strike price. In which, if I was to sell a contract at this strike price, I would have to go for a 30 cents limit price. So I would get 30 cents per share. So 30 cents times 100 would equate to about $30 in credit I would receive, which is okay. That's $30. That's gas or whatever have you, something to eat. And so then if we go down here to the bottom, you'll see where it says break even. And so the break even amount is $13.30. So what that's including is if TSSI goes above the $13 strike price and I have to sell my shares, plus that $30 in premium that's being included. So that gives me a break even price of $13.30 per share, meaning that I wouldn't get much of price appreciation, but I would still be selling my shares at a price higher than what I paid for my shares if I was to choose this particular strike price. Now, what a lot of people don't get into when selling calls, whether it's puts or calls, or selling options, I should have said in the beginning, is that there are risks involved. Meaning, like I say, initially yesterday or Friday, TSSI had gotten up to about $17 per share. Okay. And so if by chance TSSI would have closed Friday still at $17 per share, come Monday, I would be able to choose a strike price above $17. Okay, so I could have went at one point. I could have chose a strike price as high as about $20, and would have received really good premium as well for doing so. And so, with that being said, I got a $13.30 average cost and would have been able to sell at $20. I'm basically almost getting $700 in price appreciation plus that credit that I would have received. And so, like I said, this is one of the downsides about selling options, because you never know when a stock is just going to drop or when it's just going to go up as well. And so I'm lucky that I bought in at the amount that I bought in at, just reason being that the share price is at $12, but I can still sell options and still receive some type of premium and sell these options once again above my average cost. And so I went another week out to May 22nd. So that would be the Friday after next. And let's say if I was to choose the $13 strike price again, being that it's a 2-week expiration time frame, I would be able to choose a little bit higher limit price. And so if we look here, the bid is 40 cents. The ask is 90 cents. So I could go in between there. I would say I would choose maybe about 60 cents per share. So I would come out with estimated credit of about $60 of estimated credit. So if TSSI was to go above $13 and I have to sell my shares, now I'm selling my shares because I got that premium at $13.60. So I'm roughly about 30 cents over my original purchase price of TSSI. And so, like I said, this is just a risk, because if TSSI, let's say, drops down to $10 or even less, I may not be able to sell any call options whatsoever, just because there won't be any premium and there won't be any interest for people to buy or to buy those contracts at $13 or more, just because the share price is so low. And so, like I said, that's just a risk that we take when selling options and investing in the stock market. But what I want to show you guys, because like I said, that was a dramatic drop off. But what I want to show you, because at one point, maybe it didn't drop that low. The stock price did go down to $12.42 in April, early April. Okay, and from that point on, it went back up again. And so TSSI can and is a volatile, stock, just because of the type of company TSSI is. But like I say, from April the 10th all the way to pretty much May, the stock price jumped up over almost $5 per share. And so I'm just looking at it. Okay, earnings, the price dropped. I believe come next week, TSSI is going to start going back up again, in which I'm not, more than likely, unless for some reason the stock price come Monday is back up to $15 or $16, I'm more than likely not going to sell any options. I'm going to give it a couple of days or so to see where the stock price eventually kind of gets to, and like a kind of stabilizes at, in a sense, and then I'll go and sell my options again. Because once again, if we look here on the 8th, TSSI was at $10.64. It finished at $12. Okay, meaning that it went up, a little bit over $1 in a day's time. And so come tomorrow, it could go up $1. So now it's at $13. Maybe I could sell a $15 strike price call option contract. You see what I'm saying? So you just got to give it time. You have to be patient. We can't rush into things, because rushing into things, sometimes we make bad decisions, But I just want to come on here and give you guys an update once again on how things are going. Because initially I had about 1,500 that I was working with, and for TSSI to go all the way up to 17, that meant that I was up 1,700, up a couple of $100, not including the options credit that I've received. So it's just a process in which, $50 a week isn't a whole lot, but that's still $50 a week that you wouldn't have had to be able to invest in the market, because $50 a week equates to $200 a month, which is over $2,000 a year to be able to reinvest into the market. And if you do that for 10, 20, 30 years, depending on what you're investing in, it could become extremely lucrative for you, and also be additional income for you. Because my plans are, once again, I want to have at least 500 shares of TSSI. If I can't get to it, I'm okay with 100, 200 shares. But at some point in time, I'm taking that premium and I'm reinvesting that credit into a stock called QQQI, in which, if you're not familiar with QQQI, it's an ETF, an income ETF, which pays out roughly about 60 cents per share. So it has about a 13 to 14% dividend yield, and it's been consistent for over 2 years at this point, if I'm not mistaken. And there's no price depreciation. If the price does go down, it's because the stock market as a whole has gone down, and as soon as the market turns around, so does QQQI. And so I'm taking 20 here, 50 here, whatever I can get, and putting it into QQQI as well. And so I have about 6 shares of QQQI at this point in time. But with TSSI going down like it is, who knows? I may sell a 2-week expiration depending on how the stock is moving. If I can get $50 in credit, I'll take that $50 and buy more shares of TSSI below my average cost, and try and get up to 200 shares. Because with 2 contracts, now it goes from $50 a week to $100 a week, and so on. But I just want to, like I say, come on here, update you guys, let you know how things are going. This is not something that I decided to start and I've given up on. I just want to let you guys know that. But I hope you have a great next week, a great rest of your weekend. To all the mothers out there, I hope you have a great Mother's Day. And don't hesitate to like and subscribe. It's your man, Investing with Cam, and I'll talk to you soon.